Hello everyone, um, back in the Porsche Taycan. Today I'm going to be talking about an interesting topic that I wanted to share with you guys, and I'm just going to make a short drive around Mexico at night, which I think it's a really beautiful track they have here. Just following the routes, and yeah, going to be sharing my thoughts. So EPFs, what is an EPF? EPF is a employee provident fund. I think this is also known as a pension in many other countries. It's actually a pension. I don't know why it's also known as a pension, but it is a pension. Um, and in Malaysia here, we do have it's separated into many accounts. I think I'm going to skip this term and just go straight. But in Malaysia here, we're separating it in many different accounts, and account 1, 2, and 3. In account 1, I think that's where dominantly all of the EPF money goes into. It gets deducted from our salaries and it goes into there. And account 2 and 3 is, I believe, 30%, if I'm not wrong, but 30% of what you can expect from your salary, and then also the percentage that's taken out, then the dividends that are paid out. So today what I'm going to be talking about is the fact that you're able to take out that money and buy your first property. And I'm always a pretty risk heavy guy. I wouldn't say that my investment style is very risk heavy. I'm definitely not that kind of guy, but I don't feel comfortable earning, for example, 45%. Not to say 45% is anything to scoff at. 45% is brilliant. It's just that with my age at 26, and also the horizon that I'm looking at, I really want to take control and then also leverage my age. And at this age you have credibility, you have time horizon, so I really want to leverage that. And I always believe that cash is king. Think about it in the context of a corporation, for example. If a corporation is making money, but they are not having any cash in the business to fund their expenses, pay out their employees, etc., you know what will happen? They go bankrupt. Yeah. So I think the same thing applies for our own kind of money. I always try to emulate how I run my finances to how I would run my finances if I were a company. And of course, that's a video for another day on my dreams to have my own company. But today we're going to be talking about withdrawing EPFs to fund my first property. And I know I've been kind of rambling a lot and things like that. And this is meant to be somewhat of a ramble session. So please, if you really want a dedicated session on this, I don't believe this is the video for you. But if you're just here for the first time, just want to hear my thoughts, and I'm just enjoying the game at late night after my work, yeah, this is the place for you. Now back to topic. What am I gonna do? So the plan is to take the money out of account 2 and 3 of the EPF. Currently, I think closing in on about 20,000, which is not a lot. I still have to take out my own money to pay the down payment first. And in Malaysia, you actually have to pay stamp duties, you have to pay legal fees, etc. And those actually take out quite a significant amount of capital up front. So for example, I did some research for a property about 390,000. Yeah, 390,000 property would require a down payment of about 56,000 if you're not removing the stamp duties and everything. But with Malaysia, thankfully we have waivers for that, and if it's a residential property, you can waive it. Now this is the tough part, because I want to use that money to buy an investment property and earn ROI. However, the situation I'm in right now is when I want to buy a condo, most condos in Malaysia, especially in KL, I'm not sure for other states, but especially in Kuala Lumpur, they are commercial units with HDA. For those who don't know, HDA is the Housing Development Act. I don't know where I'm at, but I'm going to keep driving forward. But anyways, that's the tough part, right? You have to consider going for a residential unit, which I believe is not really ideal, because residential units are usually more expensive. They are much rarer. Whoops. All right. I think I took a wrong turn there, but yeah, they tend to be a little bit more expensive. They tend to be in more less commercial areas, hence the title of residential. But I did find a few that caught my eye, and the ones that I found were about 300 to 400,000. That means I have to prepare upfront about 40 to 50,000 cash, and that, I can tell you, that is very, very difficult for someone who has started working, even for me, right? I've been saving up. I really want to get this property to really kickstart my journey of diversifying my income streams, which again I'll cover in another video. But back to topic, what am I planning to do is to, so for withdrawing of EPF, you have to sign your SBA loan. It has to be a residential unit, and also to waive the stamp duty, you have to have it be a residential unit. This means the criteria are clear, right? I need to have cash upfront to pay for the unit first. I can withdraw the EPF later to offset it, but it's gonna take some time, right, to save up for that. So that's what I'm going to try to do. I think probably when I get my bonus, I will pump it into that down payment to really pay it off, and then withdraw the EPF to kind of compensate for that, and then probably roll it into a business or even another property. But I'm yet to decide that. And I have a lot of kind of franchising ideas, passive income ideas that I want to do, but again, not for this video. I'll save it for another video. Anyways, back to the why. Why am I planning to do this? And contrary to popular belief that everyone says to me, why are you withdrawing from the EPF? Do you have not enough money? If you don't have enough money, you shouldn't buy these kinds of properties. And yes, I do agree. If you don't have money, you shouldn't be looking into property investing. That should be the last thing you look at. But it's not that I don't have the capital, because you do have to have the capital, as I mentioned, to already pay the upfront deposits, the upfront fees and everything. Even though you waive the stamp duty, you have to fork out about 40-something thousand, which is not a small fee, right? And with that, I truly believe that withdrawing from the EPF is not a popular thing, because it's a safe haven. It's giving you, it's guaranteed by the government unless the government goes under. In Malaysia's case, I think it's going to be rare. They give pretty good dividends here in Malaysia. They give about 5 to 6%, but that's ROI, right? So why am I thinking about withdrawing my EPF? So as I mentioned, they give about 5 to 6%. it's super duper safe. I would say it's even safer than a fixed deposit. Um, so why am I doing it basically? So my thesis is that rental properties are pretty safe as well, as long as you pick a good place. You don't pick a place where there's no demand at all. And I truly believe that rental properties are assets that will eventually appreciate. Let's say it appreciates by 3%, which is, I believe, the average in Malaysia, about 3 to 4%. I think that's pretty good. And yes, you may ask, that's pretty bad because it loses out to EPF, which is at around what, 4 to 6%, right? Yes, it's true, but you're discounting the fact that I am leveraging myself, and of course, with leverage comes a lot of risk. What if I lose my job? I can't pay for it. What if that area that I bought in goes really badly and no one rents from me? I'm considering all these factors, and that's why I believe cash is king. As I mentioned back to my emulating, what a company does. I always have some cash reserves, and I make sure I have it before I go into these ventures. So I think the risk is relatively contained in that sense. I won't go homeless, or I won't go bust if this doesn't work out, for let's say a year or two. Going back to the main point, I always look at ROI when you invest, and you should always look at ROI. So let's say for 40,000 upfront, I can get 40,000 of what, 4% is, oh god, I can't do the math, but is it 1,000? 40,000, yeah, maybe 1,000. So let's say you get 1,000, but in terms of rent, you're leveraging it, and you are getting capital appreciation. So you're getting cash flow, you're getting capital appreciation on top of that. For the risk that you have to take, I believe it's, in my opinion, fine, right? I know I'm not articulating my point in a very constructive manner, but if you guys are interested in the math behind it, I'm happy to whip out the Excel, go into more of a formal format to explain it. Of course, this is kind of like just my journal, so I'm just sharing my thoughts, and that's basically why I'm planning to do it, right? I believe the leverage factor, and also for the money that you invest, you're getting the upside of the rental, you're getting the upside of the capital appreciation. I truly believe that it would outweigh any kind of profits you get from EPF. Now, don't get me wrong, this doesn't mean that I want to take money out of my EPF constantly. I truly believe that Malaysia has one of the best pension funds in the world, I would say. I'm not very sure about other pension funds. I'm aware of the 401ks in America. I'm aware of the CPF in Singapore, and that's about it. But comparably, I think Malaysia's EPF is pretty good. It's pretty good. You gotta give the credit where it's due, and it's really a hard decision. And trust me, I've been thinking about it for a long time on whether or not to withdraw. I'm still thinking about it to this day, and I probably have another year to think about it before I actually have to pull the trigger, right? But yeah, I think I'm leaning more towards taking money out of the EPF and kind of putting it through to my first property, and it only works for the first property and the second property. And I believe, again, cash is king. Wherever I can get cash from to put into proper investments where I did my due diligence, I did my studies, I think it's good. I did a video very long ago about ASMB. I still have some cash in ASMB, which is basically, I think you can call it 401ks as well. equivalent to US 401ks, or is it Roth IRAs? I'm not sure which one exactly, but it's something similar, somewhat similar to that. Oh, I moved too fast there. But basically, yeah, I think that's the general gist of it. And I know it's a controversial claim. I haven't pulled the trigger, so I might change in the year, right? I might think I prefer safety over taking the risk and kind of not do it. But in due time, we'll find out, right? And yeah, I'm gonna keep doing more of these videos. Probably with, I'm thinking about, you know, recording myself playing the game, enjoying it myself, and then kind of speaking over it. I kind of, as I mentioned before, I don't want to waste my time playing games and doing things that are not productive. So yeah, I'm not sure how I want to do it, but yeah, I feel like, you know, I'm not sure. That I heard something that like the masculine brain is not good at it's not good at focusing on two different things. And now I'm driving, and I'm speaking, and I have to think about what I speak. And when I speak, even in real life driving, I struggle. So yeah, I mean, probably saying a lot of stuff that doesn't really go through the filters that I intend to speak of, right? So I might think of another format where I just record and I kind of speak over the videos. I think that would be more formal. However, I'll see how it goes for the first few videos, and then yeah, we'll start from there. But basically, end of story. My plan right now is to withdraw my EPF account 2, account 3 to fund my first property. I believe the ROI makes sense. I believe the risk that I'm taking makes sense if I'm prepared for it. And I believe cash is king, and that's why I'm planning to do that. So with that said, thank you for watching the video, and I'll catch you guys really, really soon.